Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time on this Friday.
Hey, good afternoon.
Well, stocks on Wall Street were down for the most part, with the exception of the Nasdaq on Thursday, which continues to reach new highs. What's the story in the global markets?
Yes, as you said, U.S. market was kind of mixed. Continuation rising trend for Nasdaq happened. The Nasdaq was up about 0.63%. However, though, S&P 500 was down 0.56, and the Dow Jones was down 1.39, and also small caps were down as well by 1.76%. Clearly, investors are focusing on the prospect of the economic recovery from the COVID-19 pandemic. And if you look at the record-breaking cases and deaths in several of the U.S. states, it's causing the concern, and that is resulting into the traditional stocks prices were coming down, particularly S&P 500 stocks. However, though, because of this pandemic, we are seeing continuation of people staying at home, the COVID-19 induced restriction resulting into more usage of the technologies, and that results into additional sales number for some of these major large cap company in Nasdaq. So clearly that is resulting into two-way street of focusing on the Nasdaq-based companies rather than the S&P-based companies. This kind of trend seems to be happening all over the world. Just for example, looking at Chinese market, it's been very, very strong, but the strength is coming from the Shenzhen index rather than Shanghai index, which is focusing on much more of the growth stocks and the tech-related stocks. And right now we are under the fourth industrial revolution phase where these growth stocks, particularly in the industries related to the IoTs and online related, are all resulting into very strong sales growth rate. So clearly there is a differences between where the interest lies and where people are not really interested at this point in time.
Well, Korean stocks are lower today too, seeming to take their cue from Wall Street. What's happening in the domestic market?
Right. Korean market is also in the same trend in such that if you look at the Kosdaq versus Kospi, Kospi is down another 0.8%, while the Kosdaq is up down basically 0.01%, so basically flat. So clearly there's a differences that's happening, and it seems to be happening in the last few days where the Kosdaq is much stronger. Clearly this is the same case because the COVID-19 impact. If you look at the Korea, we have seen the daily COVID-19 cases kind of jumping to as high as over 60 cases towards the beginning of this week. Now has declined to about 45 cases, but nevertheless still quite sizable, and quite half of that number is coming from the overseas. So clearly we're still concerned about the COVID-19 impact to the economy. And as long as the economy remains to be weak due to the COVID-19 globally, the export numbers remaining weak would be some burdensome for the market performances. However, though, in terms of the valuation, it looks continue to be cheap. We are seeing Samsung Electronics and chip makers saying the numbers are coming in much better than expected. So once again, for Korean market also, there is a big difference between tech-related versus non-tech-related.
Now, the Korean currency has gained back some strength recently against the dollar, hovering now around the 1,200 won mark. Today, that went up a little bit, though. But what do you see happening with the exchange rate?
Right. If you look at the Korea's exchange rate, when it hit the highest level, it went up to as high as about 1245 range, which is quite high relative to the current account surpluses that we're seeing in Korea and the low debt ratios versus the government debt ratios as a percentage of GDP. The reason for the weakness was because the COVID-19 incident, when it started, people were quite worried at the debt ratios for the consumers being high. A lot of people were concerned about the currency depreciating along with the line of renminbi, the Chinese renminbi depreciation. However, though, with tackling the COVID-19 much better than most of the other economies in the world, Korea as well as Chinese currencies were kind of appreciating, and particularly for Korean won, it has appreciated much stronger and faster than other countries. So we saw the Korean won appreciated to as low as 1190 territories, but today it's up about 7.51 to 1202.5. Once again, I think that uncertainty remains for Korea in regards to domestic consumption because of the high debt ratio of consumers. Also, the uncertainty remains for the export numbers, where the trade surpluses declined by close to half, and clearly the trend is not necessarily positive. However, though, on a relative basis, Korea seems to be doing okay compared to the global economic growth rate going down by a significant amount, whereas Korea is going down by a slight amount. So therefore, we think that the Korean won should be remaining where it is, which is about 1,200 range. It might have a variance of 1 to 2% to the upward trend or to the downward trend. So we would expect the range bound around average of 1,200.
Got it. All right, Mr. Yu, thanks so much for sharing your insights today. Have a great weekend.
You too. Thank you very much.